What are you noticing just in sort of this day and the week and the shift in sentiment that's underway?
Well, it's like you mentioned, the concerns of the geopolitical risks. It did, what usually happens with treasuries, drove people to buy them. And, when you talk to a lot of people, they also say that maybe, like you guys have talked, we went a long way, right? Pricing in so much Fed tightening. And then you had the geopolitical concerns, and it was almost kind of a good window to take a beat, buy some treasuries as a haven and reevaluate. And we do have Fed speakers today, so that hawkish tone hasn't changed.
Well, that's what I'm curious about is like how quickly does this reverse? I mean, let's assume for a second that maybe things in Russia aren't as dire as some of the reporting has been. Does then the focus shift back to that hawkish tone out of the Fed and, for that matter, some of the other central banks out there?
Yeah, I think it's going to shift pretty quickly. And that's the tone, not just my opinion, but from a lot of investors who say, this isn't like a reversal, like we have a whole new trend, but it's that really where can rates go but up? I mean, we could talk about the yield curve. That's a different story. But at least on the short end, I don't think people are going to take out all these hikes. They've kind of come off the extreme. They're not pricing in 50 basis points in March. They, took a little bit out of the total for 2022, but people are still thinking, the Fed is going to deliver on saying that they need to kind of step up and raise rates to fight inflation. So, and like you said, other central banks, we've got our good reporting out of Europe saying ECB is likely to hike sometime in 2022, which is a huge pivot from where we were 6 months ago with them.
I'm wondering, Liz, a couple things here. What are some of the indicators that cause any signs of stress that are underlying in the markets here? What do you think about liquidity in the market here? And also, what I love about this Bank of America note is this note that they make on the selling of tips here and what it says about a potential recession ahead.
Right. Well, already we're seeing those kind of cracks in the market, which, we've talked through the years happens a lot. But, the Fed has been a big backstop to the Treasury market. So already just in them reducing their asset purchases because they're still buying a little bit, we've seen some more cracks, especially in the off the run, the less actively traded Treasuries, which the Fed was buying. That was their focus. We did see some measures of illiquidity go up already in the last week or two. And we're seeing different signs, like you said, with tips, the auction went very poorly. Tips have been the hot thing. Everyone wanted to buy inflation from the I bonds, regular people buying them. And I think now we're like, maybe things have gone too far. Because if the Fed is going to do what they say they're going to do and fight inflation, then we should see break evens and, the demand for tips should kind of wane. And we did see that at the auction.